switch over to Scott Close. He's the IR director over at EMX Royalties, a company we've often talked to in the past. And I'm really interested to get an update from Scott on what is happening in the copper space in particular. They do own a royalty on the Timok project in Serbia. Scott, it's great to have you back on the program. It's great to see you again, my friend. Oh, you're muted. You're muted. Hold on. There we go.
Much
Fantastic.
better.
Yeah, much better. Appreciate it. Good to see you, Scott.
Good to see you, Kai.
It's been too long. I hope to see you in September. But let's start with a presentation. Let's dive right in.
Okay. All right. I'm Scott Close with EMX Royalty Corp. I've been with the company for 14 years as the Director of Investor Relations. EMX Royalty Corp subscribes to a different business model than conventional royalty companies. Conventional royalty companies write big checks to acquire royalties and oftentimes take on substantial amounts of debt in order to do so. We have a different vehicle that we largely grow our royalty portfolio by, and let's take a look at that. Here's our forward-looking statement. We have actually a three-pronged approach to our business model. We have royalty generation, royalty acquisition, and strategic investment. Royalty acquisition, we go out and we acquire the prospective mineral real estate in the around the world. Do some basic inexpensive explorations on those, i.e. surface or near surface explorations. We do very little drilling because that's typically pretty expensive. Then we find enough indications of mineralization or outright mineralization to entice another company to come in and either buy or option the project. And then along the way, they're making payments to us, a variety of different payments. And then we hold back on a royalty on that, a production royalty on that. So if that property goes into production, then we will be capturing the cash flow emanating from that production royalty. Obviously, this is a much more capital efficient means of growing a royalty portfolio as opposed to the big check writing model. That being said, we do engage with the second prong of our business model, the royalty acquisition, when we can find a royalty acquisition at a favorable pricing valuation, which has become increasingly difficult as the sector has become very competitive. And then the third prong of our business model is strategic investment. We take equity stakes in companies that we think have a project that stands an outsized probability of producing a very sizable return that is currently what we think is under-recognized in the market. So we may invest directly in a company that we think has a project with huge potential. So this is sort of the cycle of the royalty generation. There's the acquisition of the property, and then there's we do some very basic and expensive explorations, but then the heavy lifting in terms of drilling and more extensive exploration is taken on by the partner once we find a partner for that project. And then so they advance the exploration, hopefully that advances to development and then into production, and then that would yield the production royalty cash flow for us in the future. This is our global asset portfolio. We have over 3 million acres of mineral properties around the world. Our largest areas of interest are in the Western United States, in Arizona, in Southwestern United States, where we're looking for big copper. Those are some of the biggest copper mines in the world there. Then a little bit further north into Nevada is another big area of interest of ours, where we're largely looking for gold. And we have a lot of properties in Ontario, and that's a mixed bag of mineral opportunities there that sort of runs the gamut of metals. Next would be Turkey. We have a number of projects in Turkey. All of those currently are in the hands of capable Turkish partners. One of those, the Rawhide Mine, that's a lead, zinc, silver property is slated to commence production here in the next month or so. And then another big area of interest for us is Scandinavia. We have a large number of properties in Norway, Sweden, and then some in Finland also. We have another key royalty up here on Palladium 1's Kakua project here. This is how things are sort of divided up to give you some context as to geographically how things are positioned. And this is divided up on just the number of properties, not the hectares or the geologic prospectivity of them or anything like that. So about 35% of our projects are in Canada, 23% in US, and then here in Sweden and Norway, we've got another 23%, and you can see going on down. Once again, gold constitutes about 62% of our projects, not acreage or ounces or anything like that. That's simply the number of properties. And then you can also see how the royalty assets are divided up. Most of our properties are in a royalty status right now. And then we have these properties down here at the bottom of the circle that are available for partnership. You can tell a lot about a company by who their partners are. And of course, we have some of the largest partners in the industry. Nevada Gold Mines, which is the JV between Newmont and Barrick in Nevada, obviously. Newmont and other projects separate from Nevada Gold Mines, South 32, McEwen Mining, Rio Tinto, Zijin, and so on. Our top shareholders are EMX management directors and employees, Stevens Asset Management, run by Paul Stevens out of the San Francisco area, a very successful hedge fund manager and venture capitalist. He was the guy who took Apple public. Newmont owns almost 6% of our shares. Sprott has 5.6% of our shares. Those are strictly in funds, but if you take a look at Sprott's client accounts, you could put another digit in front of that number there. Adrian Day Asset Management out of Maryland holds 2.3% of our shares. Antofagasta, the large copper producer out of Chile, owns 1.7%, and U.S. Global Investors out of Texas holds 1.2%. You can see that we've been around for 17 years now, and we still have a tight share structure with about less than 87 million shares outstanding. Our current cash position is about $49 million Canadian, with about another $16 million in securities in our portfolio. So all told, we have in excess of $63 million in total working capital as of the end of March. Here's our compound annual return on the stock price. And this is starting from the bottom of the market in September of 2015. You can see that we have outpaced Franco-Nevada, Royal Gold, Osisko, and Sandstorm. So we have performed very, very well. We're actually up a huge amount here just in the past year, with a lot more to come, we think, with what we have on tap. One of the things we're invested in, and this is a strategic investment for us, is the Rawhide gold and silver mine in the Walker Lane district in western Nevada. We have a 19.9% equity interest in Rawhide. They're having some difficulties, but we could see through that. We thought there was a lot of potential there to expand the resources, not only in the mine area, but satellite deposits around there that we could exploit very quickly and efficiently, and streamline and improve some of their processing there. We have a number of metallurgists and geologic and mining engineers that consult to us who are ex-Newmont and from other big companies like that, who are very proficient in these areas. So we've brought those people in to help Rawhide out. And This is structured as an LLC, or a limited liability company. And so this will be throwing off cash distributions to us when they become cash flow positive. We expect that to happen very soon, and we expect this to become a very nice ATM for us. Moving on to Arizona, the Hermosa Taylor deposit. This is being advanced by South 32. We have a piece of ground within the Hermosa Taylor deposit area that will be exploited at some point in the future. We're not sure what the timeline is on that now, but when they get into that, that's going to be a very handsome cash cow for us also. Moving on to Canada, you can see any of the round dots here that you see on there, those are all land positions that we have. Notice a lot of those in the Red Lake area. So we see a lot of potential here, and we've had a lot of call for companies looking to partner those properties on the ones that are available. Scandinavian royalty generation properties, you can see we've been very prolific in our acquisition of properties there, and also the partnering of our properties there. You know, basically what we are is we're a prospect generator, and then when we vend a property off, we hold back a royalty on that. And in the past 3.5 years, we have sold or partnered off more than 60 properties, which is more than probably all of the prospect generators in the sector combined. So, you know, anybody can be a prospect generator and generate projects. Where the rubber meets the road is, can you find partners for those projects and get those out the door? And once we partner those projects and get those out the door, we're no longer writing checks for those, we're receiving checks. And that's the key difference. And we do that in spades, so. Moving on to Finland with the Kukua royalty. With Palladium 1, they're advancing a very handsome battery metals project there. So it's nickel, cobalt, copper, and platinum group elements. We bought this royalty for about $250,000 in shares, EMX shares, and cash, about half and half. That's a 2% net smelter royalty, which can be bought down by to 1% for €1 million. And then the remaining 1% is uncapped and cannot be repurchased. And we're looking for that to be advanced very quickly. And they're constantly coming up with more and more drill results there. We think that's a very promising property, very promising. Moving on to the Rawhide Mine in Turkey. This is in a historic mining district. This is a lead, zinc, silver property that is being advanced to production right now. We have a 4% uncapped net smelter royalty on that. That's being advanced to production and should be in production here in the next couple of months. We think this thing's going to be a very handsome cash flow asset for us also. So this year is going to be a really transformational year for us. Look for that to happen. You know, all the cash flow starts landing in the treasury in the fourth quarter, probably, perhaps the first quarter of next year. And so you're going to see a material difference in the cash flow dropping to our bottom line. And as a result, I suspect to see a material difference in the share price to follow.
Fantastic. Scott, I do have to jump in here. We are out of time. We do have to move on, unfortunately, in the program. I do have a couple follow-up questions I want to ask you, like overall cash flow and things like that, but I'm going to ask you that in the chat. So let's, if you could stay on, that'd be fantastic.